Welcome back to the Pro Ticker Podcast, your Monday morning edition covering major financial magazine headlines, everyone.
Yeah.
Today's deep dive is into a stack of global market news.
Okay.
Some big moves happening that you'll want to be up to speed on.
All right.
Get ready for a roller coaster of currencies, commodities, and corporate shakeups.
It's fascinating how all these seemingly disparate events are actually intertwined.
Yeah.
We've got political drama in South Korea impacting their markets,
Right.
simmering U.S.-China trade tensions, and even whispers of a potential Bitcoin bubble.
Oh, wow.
Buckle up.
Okay.
You're about to see how it all connects.
All right, so let's set the scene with the Wall Street Journal.
Okay.
The overall economic mood feels a bit, chilly.
Yeah.
The Eurozone is experiencing a slowdown,
Mm-hmm.
and even the UK's economy unexpectedly shrank in October.
This slowdown raises a crucial question about the effectiveness of interest rate cuts.
Okay.
Central banks globally have been slashing rates to try and jumpstart growth,
Right.
but the results are mixed at best. Yeah.
Take the UK, for instance.
Okay.
CNBC is reporting their economy contracted for the second consecutive month.
Wow.
And this comes right after a controversial budget packed with tax hikes.
Really?
Is the government's strategy backfiring?
Mm.
Or are there broader global forces at play?
It's like a tug of war between government policies and these larger economic currents.
Absolutely.
Speaking of mixed results, Bloomberg reports that China's retail sales are up,
Okay.
but not as much as economists predicted.
Interesting.
Their efforts to boost spending haven't quite hit the mark.
China's situation is definitely one to watch.
Yeah.
For years, they relied heavily on exports and investment.
Right.
Now they're attempting a major shift towards a consumption-driven economy.
Okay.
The question is, will Chinese citizens actually open their wallets?
Good question.
Some analysts believe the tense trade environment with the U.S. might actually help China in the long run. By forcing them to focus on domestic demand, they could end up less reliant on exports.
Interesting.
It's a bit ironic, isn't it? It really is.
Yeah.
It makes you wonder if sometimes conflict can lead to unexpected outcomes.
Sometimes it does.
Okay, now let's head over to South Korea.
All right.
Remember their president who declared martial law and then backtracked?
Oh, yeah.
Well, he was impeached.
Right.
But, as Bloomberg reported, the South Korean markets had a fleeting rally and then went right back to worrying about the economy.
The impeachment itself was largely priced in,
Okay.
meaning the markets had already anticipated it.
So it didn't have much lasting impact.
Right. Think of it like this.
Okay.
If everyone knows a big storm is coming, they prepare for it.
Yeah,
Once the storm hits, there's not much additional disruption.
I see.
What's truly driving market sentiment in South Korea is uncertainty surrounding global trade
Okay,
and the potential fallout from U.S. tariffs.
I see.
They're heavily reliant on exports, particularly in tech.
Right.
So any disruptions there could have a significant ripple effect.
So while political drama grabs headlines, it's the underlying economic anxieties that keep investors up at night.
Absolutely.
Okay, now, for something a little more, shall we say, exhilarating,
All right.
according to MarketWatch, Bitcoin just smashed another record high,
Wow.
closing at over $106,000 on Sunday.
Really?
It surged over 50% since early November,
Wow.
partly thanks to Donald Trump's pro-crypto stance and the news that MicroStrategy, a company with a hefty Bitcoin investment, is joining the NASDAQ 100.
This Bitcoin surge is mind-boggling.
Yeah.
While some see this as proof that Bitcoin is here to stay,
Right.
others are whispering the dreaded B word,
Bubble.
bubble. Think about MicroStrategy joining the NASDAQ 100.
Okay.
On one hand, it signals mainstream acceptance for Bitcoin.
Yeah.
On the other, it could fuel those bubble fears.
Right.
And with Trump potentially pushing policies like creating a strategic Bitcoin reserve,
Uh-huh.
this already volatile market could get even wilder.
Wha-
It's definitely something to keep a close eye on, especially with institutional players like MicroStrategy jumping into the game.
So are we all rushing out to buy Bitcoin? Well,
I-
before you do, let's talk about the U.S. Federal Reserve.
Whoa.
The Wall Street Journal is reporting it's practically a certainty they'll cut rates this week.
Right.
But the million-dollar question is what happens in 2025?
The Fed is walking a tightrope right now.
Yeah.
They need to support economic growth without letting inflation spiral out of control.
Right.
There's internal debate about how aggressively to cut rates and conflicting viewpoints on how Trump's policies might impact inflation.
Right.
The big question is, will they hit pause on the cuts early next year,
Okay.
or will they be forced to keep easing? The Fed's decision will have ripple effects across global markets, so stay tuned.
So while some investors are chasing crypto highs, Others are looking for stability and clues from the Fed.
Yeah.
Speaking of seeking stability, Bloomberg reports that Alibaba is close to selling its department store business in time to Younger's Fashion for about $1 billion.
That's an interesting move by Alibaba, wouldn't you say?
Yeah, it is.
Bloomberg suggests the sale is part of a larger strategy shift for the Chinese tech giant. They're putting more emphasis on their core e-commerce operations and cloud computing business.
Okay.
It appears they're streamlining their portfolio, perhaps in response to that slowing Chinese economy we discussed earlier.
Streamlining and adapting, definitely themes we're seeing across the board today.
Absolutely.
And speaking of adapting, the Wall Street Journal reports that Apple is planning to release thinner foldable iPhones
Interesting.
to try and spark growth. Seems like they're shaking things up a bit to stay ahead of the competition.
I think it's a smart move considering how fiercely competitive the smartphone market has become. Foldable phones have generated a lot of buzz, but haven't really gone mainstream yet. Apple, with its devoted customer base and knack for design, could be the one to change that.
Okay, so we've laid out the landscape. Now let's dive deeper into these trends.
Okay.
Starting with the global economic slowdown.
Yeah.
What are some of the main factors contributing to this chill in the air?
Well, the Wall Street Journal points to a few key culprits.
Okay.
Persistent inflation is eating away at consumer purchasing power,
Right.
making people think twice before spending.
Makes sense.
It also makes businesses hesitate to invest.
Yeah.
Add to that the ongoing trade tensions between the U.S. and China, which are disrupting global supply chains and creating uncertainty for businesses.
Right.
And, of course, we can't forget geopolitical risks like the war in Ukraine,
Right.
which add to the general sense of unease. It's like a perfect storm of negative factors weighing on global growth.
And CNBC is highlighting the impact of rising interest rates.
Okay.
Central banks worldwide are aggressively raising rates to combat inflation. But is that strategy working? Or is it backfiring and actually slowing the economy down?
It's a delicate balancing act.
Yeah.
Higher interest rates can cool down inflation by making it more expensive to borrow money and spend.
Right.
But they can also put the brakes on economic growth by making it more expensive for businesses to invest and hire.
I see.
Right now, central banks seem more concerned about inflation than growth, which explains why they're continuing to raise rates despite the risks.
So for the average investor, what does all of this mean?
Well,
should they be bracing for a recession? Or are there still opportunities to be found in the market?
It's definitely a time to proceed with caution.
Okay.
The economic outlook is uncertain, and there are a lot of potential risks on the horizon.
Yeah.
But that doesn't mean there aren't any opportunities.
Okay.
Savvy investors will focus on companies with strong balance sheets,
Right.
solid earnings growth, and a track record of navigating economic downturns.
Makes sense.
It's also a good time to diversify your portfolio and consider alternative investments like gold or real estate, which can act as a buffer against market volatility.
That's a thought-provoking strategy.
Yeah.
Especially for those who might be a bit more risk-averse.
Absolutely.
Now let's shift our focus to China's consumption conundrum.
All right.
Bloomberg's report shows retail sales are increasing, but not at the pace many expected.
Right.
What are some of the factors behind this sluggish consumer spending?
There are a few elements at play here.
Okay.
First, the Chinese government's zero-COVID policy has really dampened consumer confidence.
I see.
Lockdowns and restrictions have disrupted daily life, making people hesitant to spend.
Yeah.
Businesses have felt the impact too.
Right.
Second, there's the ongoing property market downturn. Falling home prices are eroding household wealth.
Wow.
And many people are concerned about the value of their investments. And finally, the rising cost of living is squeezing household budgets, making people less likely to splurge on discretionary items.
So what can the Chinese government do to stimulate consumption and get their economy back on track? They're facing a lot of pressure on that front.
They've already begun easing their zero-COVID policy, which is a step in the right direction. They're also trying to revive the property market with various measures like lower mortgage rates and tax breaks for home buyers. And they're increasing social spending, like pensions and healthcare benefits,
I see.
to put more money directly into people's pockets.
Okay.
Will these measures be enough to overcome the challenges facing the Chinese economy? That remains to be seen.
It's a delicate balancing act for sure.
Yeah.
Now let's turn our attention to South Korea and the market turmoil surrounding their president's impeachment.
Okay.
Bloomberg reports that investors initially reacted positively to the news, but quickly shifted their focus back to the economy. Why such short-lived optimism?
Well, remember the storm analogy we talked about earlier?
Yeah.
The impeachment wasn't a surprise.
Right.
Investors had already factored it into their calculations,
Yep.
so it didn't fundamentally change the market outlook. Their bigger concerns are the underlying economic challenges facing South Korea, like slowing global growth, rising interest rates, and the potential impact of those U.S. tariffs we discussed.
Right.
These are the factors that will ultimately determine the direction of the Korean market,
Okay.
not the political drama.
It seems like investors are becoming less reactive to political events.
It seems so.
And more focused on the economic fundamentals.
Yeah.
Now, for something a bit more exhilarating.
All right.
The cryptocurrency market.
Okay.
MarketWatch reports Bitcoin has been on a tear, recently breaking through the $100,000 mark.
Wow.
What's fueling this price surge, and is it sustainable?
There are a few things driving Bitcoin's recent rally.
Okay.
First, there's a general bullish sentiment in the market right now.
Right.
Investors are feeling optimistic about the economy, and that optimism is spilling over into riskier assets like cryptocurrencies.
Got it.
Second, we're seeing growing institutional adoption of Bitcoin.
Interesting.
More and more companies' hedge funds.
Yeah. I mean, even pension funds are adding Bitcoin to their portfolios,
Wow.
boosting demand and driving up prices.
Right.
And finally, there's the perception that Bitcoin is a hedge against inflation,
Okay.
with prices rising rapidly worldwide.
Yeah.
Some investors view Bitcoin as a store of value that's not tied to any particular currency.
So is this a bubble, or is Bitcoin's price surge justified by these underlying factors? It's a debate that's been raging for years.
It's the million-dollar question, isn't it?
Yeah.
Bitcoin is undoubtedly a volatile asset.
Right.
And its price is driven by speculation as much as fundamentals.
Okay.
But Bitcoin is also becoming more mainstream.
Yeah.
And its underlying technology. The blockchain has the potential to revolutionize many industries. Whether Bitcoin's current price is sustainable,
Right.
only time will tell.
I guess so.
But it's certainly an asset class worth watching.
Definitely a space to keep an eye on.
Yeah.
Now let's shift our focus to the U.S. Federal Reserve and their upcoming interest rate decision. All right.
The Wall Street Journal has a great piece on the Fed's evolving game plan, highlighting the challenges they face in balancing inflation and growth.
The Fed is definitely in a tough spot.
Yeah.
Inflation is still running hot, well above their target.
Okay.
But there are signs the economy is starting to cool down.
Right.
They need to raise interest rates to tame inflation,
Yeah.
but also need to avoid pushing the economy into a recession.
I see.
It's a delicate balancing act,
Right.
and one they're being closely watched on.
So what are the latest expectations for the Fed's next move? Will they raise rates aggressively, or will they opt for a more cautious approach? The markets are on the edge of their seats waiting for this decision.
The market is currently pricing in a quarter-point rate hike.
Okay.
At the Fed's next meeting.
All right.
But there's a lot of uncertainty about what they'll do after that.
Right.
Some economists believe the Fed will need to get more aggressive with rate hikes to really get inflation under control. Others think they'll need to pause their tightening cycle soon.
Yeah.
To avoid harming the economy.
I see.
It's really a wait-and-see situation at this point.
A lot of uncertainty swirling around the Fed.
Yeah.
And that's impacting investor sentiment across the board. Now let's take a closer look at some of the specific companies making headlines this week. Bloomberg reports that Alibaba is nearing a deal to sell its department store business in time to younger fashion for about $1 billion. What's the motivation behind this move, and what does it say about Alibaba's future strategy?
It seems Alibaba is shifting gears, moving away from brick-and-mortar retail, and doubling down on its core e-commerce business.
I see.
The Chinese retail market is becoming increasingly cutthroat.
Yeah.
And Alibaba is feeling the pressure from competitors like JD.com and Pinduoduo. By selling in time, they can free up capital to invest in their online platforms and expand their cloud computing and digital entertainment businesses.
So streamlining and focusing on their core strengths.
Yeah.
A smart move in a competitive landscape.
Absolutely.
What about the buyer younger fashion?
Yeah.
What's their rationale for acquiring in time?
Younger is a traditional clothing manufacturer that's looking to expand its retail footprint.
Right.
Buying in time gives them a network of physical stores and a strong brand name in the Chinese market.
Okay.
It's a strategic move that allows them to diversify their business and tap into the growing demand for online to offline O2O shopping experiences.
I see.
It's like they're trying to bridge the gap between the online and offline worlds.
Makes sense.
Yeah.
Consumers want seamless experiences, whether they're shopping online or in a physical store.
Right.
Now let's move on to Apple.
Okay.
The Wall Street Journal reports they're planning to release thinner, foldable iPhones in an attempt to revitalize growth. I'm curious to hear your take on this move and how it might impact the smartphone market.
I think it's a savvy play by Apple.
Okay.
The smartphone market is getting saturated.
Right.
And Apple needs to innovate to stay ahead of the curve.
No.
Foldable phones are a new and exciting category. And Apple, with its loyal customer base and design prowess, has the potential to create a truly game-changing product that captures consumer attention.
Yeah.
But it's important to remember that foldable phones are still relatively expensive.
Right.
And it remains to be seen whether they'll have mass appeal.
So a potential game changer.
Yeah.
But it comes with a hefty price tag.
Right.
It will be interesting to see how consumers respond.
Absolutely.
Now let's step back and talk about the broader implications of these market trends.
Okay.
What does the global economic slowdown mean for investors? And how should they be positioning their portfolios?
The global economic slowdown reminds us that markets are cyclical. Periods of robust growth are eventually followed by periods of weakness.
Right.
Investors need to be prepared for volatility and adjust their portfolios accordingly.
So what should they be doing?
It's a good time to zero in on quality companies with strong balance sheets, solid earnings growth, and a history of weathering economic downturns.
Makes sense.
Diversifying your portfolio and considering alternative investments like gold or real estate can provide a hedge against market volatility.
So a focus on quality diversification and a long-term perspective.
Exactly.
Solid advice.
Yeah.
Now let's talk about China's consumption conundrum.
Okay.
How will this impact global markets, and what are the key things investors should be watching?
China is the world's second largest economy.
Right.
And its consumer spending is a major engine of global growth. The slowdown in Chinese consumption is a legitimate concern for investors.
Yeah.
Because it could weigh on corporate earnings and economic activity worldwide. Investors should watch for signs that the Chinese government's stimulus measures are working to boost consumer confidence and spending.
Right.
They should also keep a close eye on any escalation in trade tensions between the U.S. and China, which could further disrupt global supply chains and hamper economic growth.
So monitoring China's internal dynamics and its relationship with the U.S. will be crucial for investors.
Absolutely.
What about the South Korean market turmoil and the impeachment of their president? How will this impact investors, and what are the key things to watch?
The South Korean market turmoil underscores the fact that political risk can significantly impact financial markets.
Right.
Investors need to watch for signs that the Korean government is taking concrete steps to stabilize the economy and reassure investors. They should also be wary of any escalation in geopolitical tensions on the Korean peninsula, which could further destabilize the region and negatively impact financial markets.
So staying informed about both economic and geopolitical developments is crucial in navigating these markets.
Absolutely.
Now let's shift gears and talk about some specific investment opportunities.
All right.
What are some sectors or industries that you're particularly bullish on right now?
I'm drawn to sectors benefiting from long-term trends, like technological innovation, demographic shifts, and the rise of the global middle class.
Interesting.
Specifically, I'm interested in sectors like healthcare technology and renewable energy.
Makes sense.
These sectors are poised for strong growth in the years ahead, regardless of short-term economic fluctuations.
Those sectors certainly seem to have the wind at their backs.
Yeah.
What about specific companies? Are there any stocks that you're particularly excited about right now?
I'm always on the lookout for companies that are leaders in their industries, have strong management teams, and are well-positioned for future growth.
Makes sense.
But I'm not going to name any specific stocks. That wouldn't be appropriate.
Understandable.
However, I encourage investors to do their research and look for companies that fit this profile.
Right.
There are gems to be found if you do your due diligence.
Solid advice.
Yeah.
Now let's talk about the risks investors should be aware of in the current market environment.
Yeah, okay.
What are some of the key things to watch out for?
There are a number of risks in the market right now, including persistent inflation, slowing economic growth, geopolitical tensions, and the ever-present potential for a market correction. Investors need to be cognizant of these risks and position their portfolios accordingly. It's crucial to have a diversified portfolio. Avoid overexposure to any specific sector or company and maintain a long-term investment horizon.
So staying diversified, avoiding excessive risk, and keeping your eyes on the long game. Essential advice in any market, but especially in these uncertain times. What is your overall outlook for the market in the year ahead? Are you bullish, bearish, or somewhere in between?
I'd say I'm cautiously optimistic about the market in the year ahead. I believe the economy will continue to expand, although at a slower pace than in recent years. I also believe corporate earnings will remain strong, creating opportunities for investors to make money. However, I'm mindful of the risks out there, and I believe volatility will remain elevated. Investors should brace themselves for a potentially bumpy ride.
So a mixed bag of potential and uncertainty. Sounds about right for the current market environment.
It does. And the public to improve their working conditions and address these concerns about worker treatment.
It seems like the spotlight is on Amazon, and they're feeling the heat to demonstrate a commitment to fair labor practices. Now let's shift gears and talk about a company making waves with its healthcare innovation. Moderna. Bloomberg reports that Moderna, the biotech company that developed one of the first COVID-19 vaccines, is now working on a vaccine for cancer.
Wow.
What are the challenges of developing a cancer vaccine, and what are the potential benefits?
Cancer is a complex disease with many variations and causes. Developing a vaccine that can effectively target all types of cancer is a monumental challenge. However, recent advances in immunotherapy and personalized medicine have opened up new possibilities for cancer vaccines. A successful cancer vaccine could revolutionize cancer treatment, potentially preventing or even curing the disease.
Really?
But it's important to remember that cancer vaccine research is still in its early stages. And it's too early to tell when or if a broadly effective vaccine will be available.
It's a tremendously challenging endeavor, but the potential rewards are enormous.
Absolutely.
It's exciting to see this kind of groundbreaking research pushing the boundaries of what's possible in medicine. Now let's talk about a company disrupting the transportation industry. Uber. Bloomberg reports that Uber, the ride-hailing giant, is investing heavily in self-driving cars.
Interesting.
What are the challenges of developing self-driving cars, and what are the potential benefits?
Developing self-driving cars is a complex engineering feat that requires significant advances in artificial intelligence, sensor technology, and mapping. The challenges include guaranteeing the safety and reliability of these self-driving systems, navigating complex traffic environments, and tackling ethical dilemmas such as how to program self-driving cars to make decisions in life or death situations.
Wow, that's a tough one.
However, the potential benefits of self-driving cars are vast. They could reduce traffic accidents, improve traffic flow, increase accessibility for individuals with disabilities, and even reduce carbon emissions.
It's a transformative technology with the potential to reshape our cities and how we move within them.
Absolutely.
But as you mentioned, the ethical considerations are complex and require careful thought and discussion. Now let's talk about a company making headlines for its commitment to combating climate change. Microsoft. Bloomberg reports that Microsoft, the software giant, is pledging to become carbon negative by 2030.
Wow. That's ambitious.
What does it mean to be carbon negative, and how does Microsoft plan to achieve this ambitious goal?
Becoming carbon negative means removing more carbon dioxide from the atmosphere than you emit. It's a bold goal. And Microsoft plans to achieve it by investing in renewable energy, developing carbon capture technologies, and offsetting its remaining emissions through carbon credits. They're also working to reduce their carbon footprint throughout their supply chain and operations. This commitment signals Microsoft's dedication to sustainability and their recognition of the urgency to address climate change.
It's encouraging to see industry leaders like Microsoft stepping up and taking concrete actions to address this global challenge.
Absolutely. Yeah.
Now let's talk about a company expanding access to healthcare, Teladoc Health.
All right.
Bloomberg reports that Teladoc, a provider of virtual healthcare services, is broadening its platform to offer a wider array of services.
Interesting.
Including mental health counseling, dermatology, and primary care.
Wow.
What are the benefits of virtual healthcare, and how is Teladoc tackling the challenges of providing healthcare remotely?
Virtual healthcare offers a number of advantages,
Okay.
including convenience, affordability, and access to specialists regardless of location.
Right.
This is particularly beneficial for individuals in rural or underserved areas who might have limited access to traditional healthcare services.
I see.
Teladoc is addressing the challenges of providing healthcare remotely by ensuring that its platform is secure, high PA compliant, and user-friendly.
Right.
They're also working to integrate their platform with existing healthcare systems and address concerns about the quality of care provided virtually.
It seems like virtual healthcare is here to stay, and Teladoc is playing a significant role in shaping its evolution.
I think so.
Now let's turn our attention to a company promoting financial inclusion.
Okay.
PayPal. Bloomberg reports that PayPal, the digital payments giant, is expanding its services to offer microloans and other financial products to underserved communities.
Interesting.
What are the benefits of financial inclusion, and how is PayPal addressing the challenges of providing financial services to these communities?
Financial inclusion is the idea that everyone should have access to affordable financial services.
Okay.
Regardless of their income background or location.
Right.
It's about leveling the playing field and empowering individuals to participate fully in the economy.
Makes sense.
PayPal is tackling the challenges of providing financial services to underserved communities by leveraging its technology platform, its global reach, and its partnerships with community organizations.
Right.
They're offering products and services tailored to the specific needs of these communities, such as microloans, savings accounts, and bill pay services.
So it's a positive step towards creating a more inclusive and equitable financial system.
Absolutely.
Now let's talk about a company leveraging technology to enhance education.
All right.
Chegg.
Okay.
Bloomberg reports that Chegg, an online education platform providing textbook rentals, tutoring, and other services, is investing in new technologies to personalize the learning experience for students.
Interesting.
How is Chegg using technology to personalize learning, and what are the potential benefits?
Chegg is utilizing artificial intelligence, machine learning, and data analytics to personalize the learning journey for each student. Their platform can track students' progress, identify their strengths and weaknesses, and recommend personalized learning resources.
I see.
This personalized approach has the potential to improve academic outcomes, increase student engagement, and reduce dropout rates.
It sounds like Chegg is harnessing the power of technology to tailor education to each student's individual needs.
Yeah.
It's an exciting development in the world of education.
Absolutely.
Now let's talk about a company taking a holistic approach to sustainability.
Okay.
Unilever.
Right.
Bloomberg reports that Unilever, the consumer goods giant behind brands like Dove soap, Ben & Jerry's ice cream, and Lipton tea, is committed to reducing its environmental impact and promoting social responsibility across its entire supply chain.
That's great.
What are the challenges of achieving sustainability at scale, and how's Unilever tackling these challenges?
Achieving sustainability at scale is a complex endeavor.
Yeah.
It requires companies to consider the environmental and social impact of their operations throughout their supply chain, from sourcing raw materials to manufacturing products, distributing goods, and ultimately to consumer use.
Okay.
Unilever is addressing these challenges by setting ambitious sustainability goals, investing in sustainable practices, and collaborating with its suppliers to ensure they meet Unilever's standards.
I see.
They're also using their brands and marketing platforms to promote sustainable consumption and raise awareness about environmental and social issues.
It's a comprehensive approach to sustainability that goes beyond just making eco-friendly products.
Yeah, exactly.
They're aiming to embed sustainability into their entire business model.
Yeah.
Now let's talk about a company pushing the boundaries of innovation.
Okay.
Alphabet. Bloomberg reports that Alphabet, the parent company of Google, is heavily investing in research and development, particularly in artificial intelligence, quantum computing, and other cutting-edge technologies.
Interesting.
What are the potential benefits of these investments, and what are the risks?
Alphabet's investments in research and development have the potential to unlock breakthroughs
Okay.
in artificial intelligence, quantum computing, and other fields that could revolutionize industries and significantly improve lives.
Wow.
However, these investments also carry risks.
Right.
We need to consider the potential for job displacement,
Yeah.
the possibility of misuse of AI, and the ethical implications of developing such powerful technologies.
It's a balancing act between pursuing groundbreaking advancements and managing the potential downsides.
Absolutely.
Now, let's talk about a company prioritizing strong corporate governance. Johnson & Johnson.
Right.
Bloomberg reports that Johnson & Johnson, the healthcare conglomerate behind brands like Band-Aids, Tylenol, and Listerine,
Right.
is implementing new policies to enhance its corporate governance practices.
Okay.
These include measures to improve transparency, accountability, and board diversity. What are the benefits of strong corporate governance, and how is Johnson & Johnson measuring its progress in this area?
Strong corporate governance is essential for building trust with investors, customers, and the public.
Right.
It ensures companies are managed ethically responsibly and in the best interests of all stakeholders.
Okay.
Johnson & Johnson is measuring its progress in this area by tracking key metrics, such as board diversity, executive compensation,
Right.
and shareholder engagement.
I see.
They're demonstrating a commitment to responsible leadership and ethical business practices.
It's encouraging to see companies like Johnson & Johnson proactively taking steps to strengthen their corporate governance.
Yeah.
Now let's talk about a company taking a stand on social issues.
Okay.
Starbucks. Bloomberg reports that Starbucks, the coffee giant, is implementing programs to promote racial justice and equity,
That's great.
including initiatives to increase minority representation in its workforce and support minority-owned businesses. What are the benefits of corporate social responsibility, and how is Starbucks measuring its progress in this area?
Corporate social responsibility is the idea that companies have a responsibility
Okay.
to consider the social and environmental impact of their operations
Right.
and act in ways that benefit society.
I see.
It's about going beyond profit-seeking and contributing to a better world.
Makes sense.
Starbucks is measuring its progress in this area by tracking metrics like the diversity of its workforce,
Right.
supplier diversity, and community investments.
Yep.
They're also using their platform to raise awareness about social issues and advocate for change.
So they're not just serving coffee. They're actively engaging in efforts to promote social justice.
Yeah,
It's a good example of how businesses can use their influence for positive change.
absolutely.
Now let's talk about a company tackling the ever-growing threat of cybercrime.
Okay.
CrowdStrike.
All right.
Bloomberg reports that CrowdStrike, a cybersecurity company specializing in endpoint protection, is seeing strong demand for its services as businesses face an increasing number of cyber attacks.
Right.
What are the challenges of combating cybercrime, and how is CrowdStrike addressing these challenges?
Cybercrime is a constantly evolving threat to businesses of all sizes.
Yeah.
And the methods used by cybercriminals are becoming increasingly sophisticated.
That's scary.
CrowdStrike is addressing these challenges by leveraging its cloud-based platform,
Okay.
its threat intelligence network, and its team of cybersecurity experts.
Right.
They're working to protect businesses from attacks, but they're also educating businesses about cybersecurity best practices
I see.
and helping them develop effective cybersecurity strategies.
It sounds like a proactive approach to cybersecurity, which is essential in today's digital landscape.
Definitely.
Now let's talk about a company adapting to the changing demands of the post-pandemic world.
Okay.
Zoom Video Communications.
Right.
Bloomberg reports that Zoom, the video conferencing platform that became ubiquitous during the pandemic,
Right.
is investing in new features and services to enhance the user experience.
Interesting.
How is Zoom responding to the evolving needs of its customers, and what are its prospects for the future?
Zoom experienced explosive growth during the pandemic, driven by the need for remote work and communication solutions.
Right.
However, the company now faces new challenges
Okay.
as businesses return to the office.
Yeah.
And competition intensifies from rivals like Microsoft Teams and Google Meet. To stay competitive, Zoom is investing in new features and services like virtual backgrounds, breakout rooms, and webinar capabilities.
Makes sense.
They're also expanding into new markets,
Right.
such as healthcare and education.
I see.
Their future success depends on their ability to continue innovating and adapting to the evolving needs of their customers.
It seems like Zoom recognizes that what worked during the pandemic may not be enough to sustain its growth in the long term.
Right.
They're actively innovating to stay ahead of the curve.
Yeah.
Now let's talk about a company trying to navigate the complexities of the housing market.
Okay.
Zillow Group.
All right.
Bloomberg reports that Zillow Group, an online real estate marketplace, is investing in new technologies and services to simplify buying, selling, and renting homes.
Interesting.
What are the challenges of the housing market, and how is Zillow Group addressing these challenges?
The housing market is facing a confluence of challenges, including rising home prices, limited inventory, and affordability concerns. These factors make it difficult for many individuals and families to enter the housing market or find suitable housing options.
Yeah.
Zillow Group is addressing these challenges by providing tools and resources for buyers, sellers, and renters, such as personalized home recommendations, virtual tours, and mortgage pre-approval services.
Interesting.
They're also striving to improve transparency and efficiency in the real estate market through their data analytics and market research.
It sounds like Zillow is leveraging technology to streamline the real estate process.
Absolutely.
And make it more user-friendly for everyone involved.
Yeah.
Now let's talk about a company championing financial literacy.
Okay.
Intuit.
All right.
Bloomberg reports that Intuit, the maker of financial software like TurboTax and QuickBooks, is investing in programs to educate consumers and small businesses about personal finance and financial management. What are the benefits of financial literacy, and how is Intuit addressing the challenges of reaching a broad audience with its educational programs?
Financial literacy is crucial for making informed financial decisions, managing money effectively, and ultimately achieving financial goals. However, many individuals and small business owners lack the necessary knowledge and skills to navigate the complexities of personal finance.
I see.
Intuit is tackling this challenge by offering a range of resources, including online courses, webinars, and articles, covering topics from budgeting and saving to investing and tax planning.
Makes sense.
They're also partnering with community organizations and financial institutions to deliver financial literacy programs to underserved populations.
So they're taking a multifaceted approach to promoting financial literacy, which is critical for empowering individuals and strengthening communities.
Exactly.
Now let's talk about a company addressing the mental health crisis.
All right.
Headspace Health.
Okay.
Bloomberg reports that Headspace Health, a provider of meditation and mindfulness apps, is expanding its services to offer mental health therapy and coaching.
Interesting.
What are the benefits of meditation and mindfulness? And how is Headspace Health meeting the challenges of providing mental health care through digital platforms?
Meditation and mindfulness have been shown to have numerous benefits for mental well-being. They can reduce stress, improve focus, enhance emotional regulation, and promote a sense of calm and well-being.
Makes sense.
Headspace Health is addressing the challenges of providing mental health care through digital platforms by ensuring its apps are evidence-based, user-friendly, and accessible to a diverse range of users. They're also working to address concerns about privacy and confidentiality, which are paramount in the realm of mental health care.
It seems like they're bridging the gap between traditional mental health care and the accessibility of digital platforms.
Absolutely.
Now, for something a bit different, Barron's highlights an interesting trend. Many young bankers are turning to drugs like Adderall and Vyvanse to cope with the intense pressure and long hours on Wall Street.
This trend raises concerns about the culture of overwork and intense competition in the financial industry. It points to the need for a more supportive and sustainable work environment, one that prioritizes well-being alongside performance.
I see.
It's not sustainable to expect individuals to constantly operate at such a high level of stress and intensity without addressing the potential consequences for their mental and physical health.
It's a reminder that even in highly competitive and demanding fields, prioritizing well-being is essential for long-term success and sustainability.
Absolutely.
Now, for a lighter topic, the Wall Street Journal had an intriguing article about how Myrtle Beach is becoming a popular destination for retirees.
Interesting.
It's not just about the beaches and golf courses, although those are certainly draws. What's driving this trend is the affordability of housing, the warmer climate, and the lower cost of living compared to other popular retirement destinations.
Makes sense.
It's a reminder that demographic shifts and lifestyle preferences are constantly shaping the real estate market.
Absolutely.
And the Wall Street Journal also pointed out that older Americans are moving to Myrtle Beach faster than anywhere else.
Wow.
This influx of retirees could have interesting implications for local businesses, housing prices, and even healthcare services.
It's a perfect illustration of how demographics can have a ripple effect on local economies.
Yeah.
It's also a reminder that investment opportunities often lie where the trends are heading.
So keeping an eye on demographic trends can provide valuable insights for investors.
Absolutely.
We've covered a lot of ground today.
Yeah, we have.
From global economic trends to individual stock picks, from social unrest to retirement hotspots.
Right.
What are some key takeaways that our listeners should keep in mind as they navigate these markets?
First, stay informed.
Okay.
Keep your finger on the pulse of the major economic and political forces shaping the markets.
Right.
Second, remember, diversification is your friend.
Good advice.
Don't put all your eggs in one basket.
Yeah.
Spread your investments across different asset classes, sectors, and geographies to manage risk effectively.
Right.
And third, and perhaps most importantly, never lose sight of your long-term goals.
Okay.
Don't let short-term market fluctuations derail your investment strategy.
Right.
Stay focused on the big picture.
Excellent advice.
Yeah.
Awareness, diversification, and a long-term perspective. Those are the guiding principles for navigating today's complex and ever-changing markets.
Yeah, absolutely.
We'll see you all tomorrow morning with new headlines from major financial magazines.
See you then.
Until then, happy investing.